I was 20 years old when the oil embargo hit in '73. 20. I had just started trading, had maybe 3 months under my belt, barely knew what I was doing. And then the world changed overnight. The Yom Kippur War, the Arab embargo, and the price of crude quadrupled in a matter of weeks. I remember standing on the floor of the exchange, literally just learning how to read the tape, and watching grown men panic in ways I'd never seen before. Traders who'd been doing this for 20 years, 30 years. Men who thought they understood the market, and none of that understanding mattered because the market had become something completely different. I was too young and too stupid to be afraid. That might have saved me. I remember the first day of the embargo clearly, October of '73. The energy sector was exploding, literally. Prices were moving in ways I didn't even know were possible. I had a tiny position. I was still learning, still operating with the kind of capital a 20-year-old trader could lose, and I watched that position move more in a single hour than I thought it could move in a week. The older traders around me were shouting. Some of them were pale. I remember one guy, must have been 45, 50, just staring at the screen like he didn't recognize what he was looking at. He had a huge position on, a position sized for a normal market, and the normal market had ceased to exist. He lost everything that day, not through a bad trade, through a position that was sized for yesterday's world. And I learned something in that moment that I've never forgotten. I learned that size kills you faster than bad trades ever will. I was young enough that I didn't have a system yet, didn't have the ego of a successful trader, didn't think I had figured anything out. I was just trying to survive and learn. So when the volatility started spiking, when I realized the market was doing things I'd never seen before and would probably never see again, I did what any terrified 20-year-old kid would do. I got smaller. Not strategically, not because I'd read it in a book or been taught it, but because I was scared. The market was moving too fast. My tiny positions were whipping around like they had a mind of their own. I couldn't predict anything. I couldn't trust any of my early instincts. So I cut my size in half, then in half again. And looking back now, that fear, that primal gut-level fear of something I didn't understand, that might have been the best education I ever got. I watched what happened over those weeks and months. The volatility was insane. Daily ranges were expanding. Limit moves were common. The market would gap open and never look back. Or it would gap open, gap back, and leave everyone who chased it stopped out by lunch. And I watched two types of traders emerge from that chaos. The first type were the guys who thought this was their moment. The big volatility meant big moves. Big moves meant big money. So they stayed big. They sized their positions the same way they had in the calm markets. Some of them even sized up because they figured the opportunity was too good to pass up. I watched those guys get obliterated. Not all of them. Some of them caught a big move and made a fortune. But most of them, the vast majority, they got whipsawed to death. They'd be in on a move that looked real, stop gets hit, market reverses, they're back in the other direction, stop gets hit again. By the end of the day, they'd lost more money than they'd made in months. And it happened over and over and over. Day after day, these guys were doing the same thing, chasing the big moves, getting stopped out, chasing the other direction, getting stopped out again. It was like watching someone bang their head against a wall, wondering why their head hurt. The second type were the guys who did what I did. They got smaller. They widened their stops because they realized that in this new environment, the normal noise of the market had become massive swings. They sat through whole sessions without making a single trade because they couldn't find a clean setup. They were patient in a way I'd never seen patience before, and they survived. I remember one old-timer, must have been in his 50s, he told me something that stuck with me forever. He said, "Kid, the volatility is a test. And it's not testing whether you can make money, it's testing whether you can survive. Because if you can't survive the volatility, you don't get to see the calm that comes after. And that's when the real money is made. Those months in 73 and 74 were brutal. But I was young. I didn't have the ego of success yet. I didn't think I had all the answers. So when the market told me I was wrong, when it did things I didn't expect, I didn't double down and insist I was right. I just adapted. I made my positions smaller. I accepted that I couldn't predict what was going to happen. I stopped looking for clean trades and started looking for any trade that made sense at all. And a lot of times, the trade that made sense was no trade. I'd sit there for hours watching the market chop around, and I'd just not trade. And the frustration of not trading, of feeling like I was missing out on moves, that was hard. But it was easier than the frustration of being stopped out over and over because I was sized too big for a market that had gone insane. By the end of 74, when things started to calm down a little bit, I was still alive, still had capital, still had my seat at the table. And a lot of the guys who'd started at the same time I had, they were gone, blown up, back home, out of the business. And that's when I realized the real lesson of the volatility. It wasn't about making money. It was about surviving so that you could make money later. The calm didn't come all at once. The 70s stayed volatile. There was the second shock in 79 with the Iranian Revolution. More chaos, more madness. But by that point, I'd already learned the lesson. I'd learned it when I was 20 and stupid, and just trying to survive. And the traders who came in after the first shock, the ones who only knew the volatile market, some of them never learned the lesson. They thought the volatility was normal. They thought the wild swings were just part of how the market worked. So they traded them like that. And a lot of them got eaten. But the ones of us who remembered the calm before the storm, we knew that volatility was temporary, that eventually things would settle, that the market would go back to moving in ranges that made sense. And when it did, we'd be there. And we were. The 80s rolled around and the volatility started to normalize. And the traders who'd survived the 70s, who'd kept their capital intact, who'd learned respect for the market, who understood that you don't fight volatility, you adapt to it. Those guys made a fortune. I made mine then. Not during the chaos, but after the chaos, because I was still standing when the chaos was over. So what did the oil shocks of the 70s teach me about volatility? First, volatility is not your friend, and it's not your enemy. It's a force. And when a force that big shows up in your world, you don't fight it. You don't try to ride it. You shrink. You get small. You give it room to move without taking you with it. Second, most of the action in a volatile market is noise. It looks real. It feels real. Your heart is pounding and your instincts are screaming at you to do something. But most of that noise doesn't lead anywhere. The traders who tried to trade every swing in the 70s, they got destroyed. The traders who waited for the real moves, they survived. Third, the market always settles. Volatility always passes. That's not a hope. That's a pattern. And if you can survive the unsettled market, you get to see the settled one. And that's where the real money is made. I was 20 years old, too young to know better, too inexperienced to have formed bad habits. And I got incredibly lucky because of that. I got to be shaped by the volatility instead of destroyed by it. Sometimes I think about that young kid on the floor in 73, scared out of his mind, watching the market do things that didn't make sense, making positions smaller and smaller because he didn't know what else to do. And I'm grateful for that kid. Grateful he was afraid. Grateful he didn't have the confidence to fight the market. Because that fear became respect. and that respect is what kept me alive for the next 50 years. So when volatility shows up, and it will show up because it always does, ask yourself, what would that 20-year-old kid do? He'd scale down. He'd wait. He'd accept that he couldn't control the market. And he'd make sure he was still around when things settled. That's all it takes. That's the whole lesson. Survive the chaos. Profit from the calm. Everything else is just details.